Bitcoin has established support near $27,750 in recent trading sessions, piquing the interest of traders and investors over the cryptocurrency's future course. Many people are unsure whether this support level will hold after suffering a bearish trend or whether further drops are imminent. Technical indications, as well as any potential catalysts or news events that can affect the price of BTC, should be closely monitored by market participants. Both bulls and bears are keenly watching Bitcoin's next move as the market remains unpredictable. Some are expecting a potential reversal, while others are being cautious and anticipate continuing downward pressure. A closer look at First Republic Bank's demise. BTC is currently dealing with the second largest bank failure in American history as it begins a new week. After a sideways weekend, the fall started to take hold, and BTC/USD was already experiencing volatility entering the new weekly and monthly candles. Despite being potentially even more under pressure as a result of First Republic Bank's bankruptcy and subsequent takeover by JP Morgan Chase, BTC stabilized yesterday at around $29,000. For the past 2 months, the recent banking crisis, which saw 3 to 4 significant bank failures, has supported the cryptocurrency market. But the strength of the US dollar has increased over the last 3 days, which has hurt the biggest cryptocurrency by market cap. The possibility of additional surprises in the cryptocurrency markets is still present, though, as there are many factors to take into account. Focus on the macroeconomic week. Bitcoin traders are closely observing the weekly macro events for hints regarding the price movement of BTC. The U.S. Federal Reserve's interest rate decision on May 3rd, the FOMC meeting, and the release of the non-farm payrolls data on May 5th are the key events for BTC traders keeping a watch on the market. If the Fed's rate hike meets expectations or is less than 25 basis points smaller than expected, BTC traders may react favorably and push the asset's price higher. If the rate hike is greater than 25 basis points, the price of Bitcoin is likely to fall significantly this week, according to past data. While reporting Q1 earnings, MicroStrategy's Bitcoin conviction remains strong. The business analytics platform MicroStrategy has confirmed its commitment to its Bitcoin investing plan after reporting its first quarterly profit since 2020. The Michael Saylor-founded business generated a $94 million profit in the first quarter of 2023, largely as a result of a one-time income tax windfall of $453.2 million. Along with the tax reduction, the business brought in $121.9 million in revenue, a 2.2% increase from the same period in 2022. The CEO of the business credited the right strategy, or the BTC investing thesis, with this accomplishment. On Tuesday, the sliding BTC prices found some support, thanks to this encouraging trend, reverting to the $28,000 support level. BTC/USD is currently trading at $27,931, down more than 1% day over day. BTC prices fell under the $28,000 support level on May 1st after the market opened due to fresh worries in the American banking industry and the impending Fed interest rate announcement, which strengthened the US currency. Positive news from MicroStrategy, however, enabled Bitcoin to return to its crucial support. In the past, at the 28,800 level, the 50-day exponential moving average served as a support point for Bitcoin on the 4-hour chart. The RSI and MACD indicators suggest a potential decline for the price of Bitcoin today, and the candlestick patterns indicate a predominantly pessimistic sentiment in the market. On the downside, a trend line that can be seen on the 4-hour chart and represents the 27,600 level may provide immediate support for Bitcoin. BTC may be headed for the next support level of 27,200 if the price breaks through this crucial 27,600 threshold. The excitement following the Shapella upgrade that momentarily drove the price of Ether, ETH, to 11-month highs in the mid-$2,150s earlier this month has largely subsided. The Ethereum blockchain's native token, Ether, which powers smart contracts, was last trading near $1,900, up about 4% for the month but over 11% behind earlier monthly records. Despite the fact that the price of ETH has paused over the past several weeks, analysts are still upbeat about the long and medium-term prospects of the cryptocurrency. That's partly because macro conditions are still shifting in favor of blue-chip cryptocurrencies like Bitcoin and Ethereum, which have big market caps and high levels of confidence. First Republic was recently placed under FDIC receivership, adding to the burgeoning concerns about the banking crisis. The Fed's tightening cycle, while still ongoing, appears to be nearing its conclusion. This indicates that 1. Safe haven demand as alternative form of money and 2. Easing financial circumstances, i.e. a lower US dollar and US bond yields, will likely continue to benefit blue-chip cryptocurrencies. But unlike Bitcoin, Ether can also rely on two important deflationary tailwinds that are likely to support price growth in the years to come. Supply deflation in ETH is increasing. The rate at which the supply of Ether is deflating keeps increasing. A week after the deflation rate nearly reached its yearly peak a week earlier at 3.933%, the annualized EIP 1559 burn rate topped the ETH issuance rate on Thursday by 1.753%. Chart information provided by crypto analytics company Glassnode shows that the net inflation rate has been negative more or less every day since the end of January. Individual ETH tokens are getting scarcer at a faster pace when the deflation rate rises. According to the majority of analysts, this should increase the cryptocurrency's price over time. An increase in Ethereum network fees is related to the rising deflation rate. There are two parts to network fees. In order for their transaction to be accepted and executed on the blockchain, all users are required to pay a base fee. Then, as an optional tip, users can speed up the processing of their transaction. The basic fee is automatically calculated by the Ethereum network and increases during periods of high network activity. All of these base fees paid by users must subsequently be burned in accordance with Ethereum Improvement Proposal, EIP, 1559, which was incorporated into the Ethereum code during the London hard fork in August 2021. This will eliminate the tokens from circulation forever. As a result, when the base gas fee increases, Ether is burned at a faster rate. The supply of ETH will decrease once this burn rate surpasses the ETH issuance rate, which is currently about 0.55%. The nodes and stakers who protect the Ethereum network are given ETH. The amount of ETH tokens that can be staked is quickly declining. As more and more investors stake their ETH tokens to assure returns, the quantity of unstaked ETH is anticipated to continue to fall quickly, which will improve the price of unstaked ETH. Since the Beacon Chain's introduction of staking in December 2020, the most recent Shapella upgrade has made it possible to withdraw ETH tokens that have not yet been staked, up to a maximum of 50,400 per day. Investors have been dumping their ETH tokens into the staking contract at a faster rate than the 50,400 ETH token withdrawal restriction as a result of the recently introduced flexibility to ETH staking. According to data provided by Glassnode, the amount of ETH tokens staked reached new highs around 19.5 million on Thursday, up almost 1.5 million from the previous month. Only slightly more than 16% of the total ETH supply, which is currently around 120.4 million, is currently being staked. That is significantly less than other comparable proof-of-stake Layer 1 blockchains like Cardano, which typically has a staking participation rate between 60 and 70% of supply. The amount of easily accessible, unstaked, ETH tokens on the market decreases as more of them are locked into the staking contract, where they are trapped behind the 50,400 ETH tokens per day withdrawal limit. This increases scarcity. The price of ETH should increase theoretically as a result. Both deflationary tailwinds are expected to strengthen. Tens of millions of unstaked ETH tokens would be removed from the immediate circulating supply if the ETH staking participation rate increased to the 40 to 50% range in the upcoming years. In the meantime, historical precedent shows that Ethereum transaction costs and the burn rate may rise as well, drastically increasing the rate of deflation of the ETH supply. Early in 2022, there was persistently significant network congestion, which frequently caused the daily annualized ETH, EIP 1559, burn rate to reach 6.0%. As a result of the much higher energy costs and miner rig expenses incurred by the miners who powered the network, Ethereum's issuance rate was much higher at the time, averaging around 4.4 to 4.6% annually. At the time, the Ethereum blockchain was still powered by the much more energy-intensive proof-of-work consensus mechanism. Thus, the maximum rate of deflation for Ether was only about 1.5%. However, the newly much lower ETH issuance rate, in the 0.5 to 0.6% area, means Ether's deflation rate could soar to a startling 5.5% if a resurgence in the broader crypto and DeFi market can send the EIP 1559 burn rate back to its early 2022 highs. It's important to remember that, eventually, forthcoming Ethereum blockchain updates, like as the adoption of sharding, perhaps later this year or in 2024, should lower transaction fees and control this deflation rate. Ether might outperform Bitcoin during the forthcoming crypto bull market due to dual inflation tailwinds. Does this imply that Ether might increase by 6 or 7 times to reach the $10,000 range if Bitcoin increases by 5 times from its current levels to reach $150,000 in the next years, as many appear to anticipate?